Alright guys, in this video we're going to review Fidelity's ticker symbol FDRV, Fidelity's Electric Vehicles and Future Transportation ETF. This ETF has been beaten down over the years, and we're going to get into it and think, is it a good investment or should you just invest in individual electric vehicle stocks? So expense ratio right off the bat is 0.039%, which might be high to some. And if you own this around 2021 when it was created, it went all the way up to $30, and it has sold off 50% down to $14. That's why I bring it up, because it has oversold completely. So now not all ETFs come back, so you have to make a decision whether this is a good investment or not. But just looking at it since 2021, this is what your chart looks like. $30 down to 14. Is it forming a bottom? Is this a good entry point? That's a question we have to ask ourselves. Let's look at the composition here. And the fund seeks to provide investment returns that before fees and expenses that correspond with electric vehicles and future transportation index, where 80% of the assets and securities are under this Fidelity electric vehicles and future transportation. So basically it's an international equity, it's passively managed, it's a global large stock growth, and it only owns 60 funds. So there's only 60 stocks within this, which you can see right here, and the top 10 make up 38%. So before you own this ETF, you really got to think, do I like these companies within it? So let's take a quick look. Analog makes up 5.6%, semiconductors 4.3%, Tesla at 4.1%, Invion Technologies 4%, Garmin at 3.9%, BYD at 3.8%, Uber Technologies at 3.77%. When I look at this ETF, I kind of wish that they made their top 10 more heavier. And I feel like if you're going to have an electric vehicles ETF, this Tesla should be at least 8 to 10% of this portfolio. And the Uber should be at least 5 or 6% allocation, and the semiconductors should be much higher. And I'm surprised that Nvidia is not in here as well, because it is large cap and medium stock, so you would think that it would hold that, but it doesn't. So it's definitely something to keep in mind. United States 56%, China 12%, South Korea 7%. So you are getting some US and international exposure here. So it's not just US companies. And now when you look at it, you're in the mid-cap range, where it's trading at this blend of value and growth, but the semiconductors make up 32%. I don't know how Nvidia is not included in this fund. To me, that makes no sense. If you could redo this, they should have put Nvidia on top, Tesla, Uber, and this ON Semiconductors, in my opinion, and throw some maybe TSM in there, because they're talking about electric vehicles and transportation. So you have this, included. Nvidia is talking about making chips for Tesla. I don't know how it's not included, but anyways, maybe that'll get changed in the future. Looking at the distribution and expenses, you can see the dividend yield is basically nothing, so you're not really earning anything. You're looking for pure growth here at 0.29%, where the expense ratio is 0.039%. So you're not really here for the dividends, and it's not exactly paying you for that. Ratings analysis, it's so new that there really are no ratings on it, but the performance is very poor. Let's look at your $10,000 investment since 2021. $10,000 would be worth only $5,000 right now, and you're not earning much of a dividend, so you're not making it up. So the life of it is down 19%. So if you're buying this, you definitely have to be very cautious with the companies that are within it. There are no comparisons, and looking at the statistics here, you can see the institutional ownership is only 10%, where other, I'm assuming it's retail, I'm not 100% sure, is 89%. It's an ETF, open-ended investment company, and this is where you're at. Fidelity Management Research Company, LLC, has done a very poor job performing with this fund, but maybe that's just for this time frame for now. The net expense ratio is 0.39% compared to the median of 0.5%, and overall the dividend's very weak. It doesn't even show it here. And the net assets are 34 million compared to 154 million. So if you think electric vehicles are going to be, the powerhouse of the future, then this may be a good entry point for you, knowing that they went from $30 to $14. But you really have to believe in the thesis of electric vehicles, and you have to ask yourself, if you believe in electric vehicles and transportation, why pay that fee when you can just cherry pick these companies and just invest in them automatically? I'll post a video how you could invest just in stocks on Fidelity, and you could just do weekly or monthly investments and not pay any fee. and it'll just buy these stocks every day, basically from like 9:30 to 10 a.m. on the day that you select. But you can see that the holdings, you know, overall haven't been performing very well at that negative 17%. So tell me what your thoughts are. Tell me if you're interested in this. I'm curious if anybody is buying this because it just keeps selling off, and you have to have, you know, basically a good vision and concentration that you think that electric vehicles and transportation is going to, you know, rise in the future. Because right now it looks pretty grim, but it's good to make a video on something that is not performing well to see how it does. So definitely check it out.